Hello traders, good evening. We're on the evening of 4th of May 2022. This is a Wednesday evening, 31 minutes past 8 p.m. and we had quite a bloody day for the Indian equity markets, down 381 points, the Nifty near-month futures to close at 16,702, minus 2.23%. We're looking at the daily chart of the Nifty near-month future, and we can clearly realize the kind of breakdown that we have had. The index over the recent past have been managing to hold on to these lows, little below that psychological 17k mark, but today it was a nice cut through these supports and teasing the 61.2 retracement of this particular run up. That's where the index touched today's intraday lows. The underlying trend, which was tilting on the downside, has now opened up very clearly. Moving averages have started to open up thanks to this big fall in today's session. And so, keeping in mind the overall macroeconomic situation, key macroeconomic parameters like that of inflation, which definitely will lead to further tightening from the point of view of monetary policy. Most of the experts would be careful and cautious in the equity market and the approach in equity as an asset class. And so I think that this opening up of the downtrend is likely to extend further down. Now, let's not get into prediction whether it will go to 16,200 or whether we will get to see a sub 16k mark. Let's not go there. But if any kind of bounce back that we notice in the near term future, if at all, the problem is the index needs to deal with significant multiple resistances for any kind of strong structural uptrend. The possibility of a strong structural uptrend, which was something like this, I call this as a strong structural uptrend. The markets tried twice to reverse the trend, and both the times it was a failed attempt. And so I think that our approach toward equity should be either in the ultra short term or in the ultra long term. By this I mean that one should be looking to do more of short term trades, hit and run trades, or look at valuations and look to buy good quality companies for a very long span of time, because now is the time where you will probably get good companies at a relatively discounted price. In today's trade, most of the sectoral indices closed negative very clearly, except barring the public sector enterprises marginally positive. We'll take a look at it and talk about 2 or 3 stocks from this pack later today in this video. But let's quickly talk about some levels for the Nifty and Bank Nifty. So 16,600 is the 61.8 Fibonacci retracement here, this particular one. There you go. And below that we have the 76.4 and 78.6, which I have a lot of respect towards. 16,200, 16,250 kind of levels. These are levels coming in from the daily charts, highly possible. On the upside, as long as 17,300, 17,400 is not taken out, let's not get overly bullish just because of the fact that the markets are cheap. 75 minutes time frame will clearly reflect this downtrend, and as long as we don't get a structural reversal of the trend, something like this, I think it's not a very good idea to look for long swing trades or long breakout trades. You can look for contrarian trades, but definitely not long breakouts, and you probably will not even get much of long breakouts. You can very clearly see that the point of control of the two volume profile, one is drawn from this low to this high, and the second one is drawn from this high to the current price. You can see that both the point of control comes very close to this zone, which is 17,200, 300 kind of level. So that stays as a very strong short-term resistance for the index. The Bank Nifty also has opened up pretty well and is broken below its recent lows. We can draw the Fibonacci retracement of this leg, and we can see that the 61.8 over here for the Bank Nifty comes around 34,800. The index is back to its previous swing lows from where we had this run up, and so it might try to give some respect, but looking at the way the index sold off, I don't think so it's going to happen anytime soon. 34,800 remains as one short-term level to look for. Strategically, you should maintain a short bias for the Bank Nifty and the banking pack as well. Strong resistances, if you quickly check the volume profile of this leg up, and also if you check the volume profile of this leg down, then it will give you a little bit of mixed view, because over here we can see that in the leg up the point of control was around 35,500. So this is where the maximum volume happened on the up leg, and there was clear signs of redistribution, most of the volumes happening there. Down here we can also see some decent volumes, so which is around 36,400, 36,600. So I would say 36,400, 36,600, this zone stays as an important resistance. Unless this is taken out, it won't be a smart thing to trade on the long side, short-term trading on the long side, that is. The public sector enterprises, as I was telling you, is the only sectoral index which is holding all right. You can see a nice structural uptrend in this case. This is the daily chart, and if we dig into the constituents of this pack, then you would notice that it was Power Grid and ONGC which was significantly had a great run, and it has been extending its underlying uptrend. Power Grid up almost 2.5%, ONGC in the futures market up almost 3.5%. But I would like to bring your attention to NTPC. Why? Because number one, a clear, nice, well-defined trend. Number two, it has gone through its share of short-term correction. Number three, it is giving us a bounce back. The two-day bounce back, though today it's slipped quite a bit from its intraday high, and this is the NTPC near month futures chart. It's around 162. So I feel that if the stock takes out this 162 level on the upside, there has been a range expansion. The volatility, the choppiness have been on the higher side, but still, nevertheless, it's got a very well-defined trend behind it. So if it takes out 162 and if it stays above the 155, 156 zone, if these kind of levels are held and it sustains above this level, then yes, the stock might have the possibility of further upsides of in the tune of 170, 175 or so. But that needs to be seen. On the other hand, if you take a look at ONGC, that stock is actually moved into a downtrend and it's bouncing back. So quite a mixed feeling here between NTPC and ONGC. Power Grid, on the other hand, is also very well structured on the upside. The other stocks in this space, this is Hindustan Aeronautics, which might have a little bit, which you might be interested, because pretty nice, strong, well-structured uptrend here. It's going through a short-term correction. Pullback traders will definitely find this interesting. And the high for today's trades was around 1614, 1614. So yeah, you can keep an alert of 1615. I'm going to do that right here. There you go. And if it takes that level on the upside, then yeah, maybe we can get a short-term bounce back. These possible bounce backs should be looked into from a short-term trading perspective, only hit and run kind of trades. I don't think sitting on too long positions in the equity market for over a couple of weeks, you can, but what you will face and you have to stomach is a lot of choppiness and volatility, which as a trader you may not like it. Anyways, we had our share of volatility over the last month or so. This was a phase where it was crazy choppy, and now the market has finally opened up on the downside. As a trader, I would hope, I wish that it trends so that the market continues to offer good directional trades. If it goes back to the volatile zone, which I don't think so it will, trading will again become difficult. I hope you were relatively safer in this today's fall. So yeah, trade well, trade wise, and do take care of yourselves. Thank you.